initially. Okay. Thank you so much again for being here today with us in this IWCA Connects. Today, Wednesday, May the 20th of 2020. Albert, thank you so much for joining us today. For IWCA is an honor, and we tried to reach out to all our chapter members around the world. Today, IWCA focusing into their objectives in supporting and empowering women around the world in the coffee area and in all the value chain of the coffee industry. We are supporting 25 groups around the world, which are the IWCA chapters. We have in Latin America, in East Africa, in Asia, in the Middle East, and in Australia. These chapters are, most of them are from coffee producing countries, but also we have two in coffee consuming countries, in Japan and Australia. And we are currently working in a chapter formation in the USA and some countries in Europe. Germany, the first of them, who very soon will be having signing the MOU with IWCA to be the chapter in Europe. So this is, for us, is a very important moment. And of course, we are trying to reach out as much as possible and support all these groups with their projects, their objectives, and their goals. So I will introduce Albert Scalla. Today he will be talking about the current situation of the coffee market and other commodities. Albert Scalla, he's a senior vice president of the International FCStone, has combined his considerable knowledge of the coffee, cocoa, and palm oil markets with his experience in implementing risk management strategies in future options and structured products in the international commodity markets. Albert joined INTL Futures, later acquired by International FCStone more than 27 years ago, where he has been an important pillar for the development of risk management programs for all participants in the coffee, cocoa, and the palm oil markets, from producers to final consumers. He has been invited as a guest speaker to several international coffee conferences to speak on price risk management for coffee participants in both producing and consuming countries. Albert received a bachelor's degree in business administration with a specialty in finance from the Florida International University. He is a past president of the Pacific Coast Coffee Association as well. So, Albert, I will pass it on to you. I will give you the, I will let you do your, hold on a second. Okay, you have the screen, sir. You can get it started.
Perfect. Thank you, Blanca. Thank you, everyone joining us today. Thank you, Callum. And special thanks to the entire International Women's Coffee Alliance for setting this presentation up. These types of events in the current conditions that we're going through are of utmost importance for all coffee producers, everybody in the supply chain. We were speaking yesterday that one of the results was that we have not had a gathering, a conference, a convention in quite some time, possibly since late October or November of last year. The Specialty Coffee Association was canceled this year. The European Specialty Coffee Convention was canceled. We just got word yesterday that Sintercafe in Costa Rica, which is the large yearly gathering, was canceled. So not having these events where everybody can gather together, share information, share knowledge, share trends and everything, you know, it's important to be able to transmit what's going on, even if we can't join these conferences. Usually we go to the conference, we find information, we take it back to our countries, we share it with our colleagues, but now that information transfer has stopped, and coffee was one of the products that we work with on a yearly basis that had the most conferences, the most conventions. So, you know, my salutations to the IWCA for taking the lead in taking this information to its members. We're going through the most difficult situation in the history of the world. We haven't had this situation, not even during the wars, economic disasters, recessions. We are at a situation that we have not been through this math. Everybody, so learn as we go. We're trying to figure out what we need to do. We're trying to figure out what's happening. So in order to understand everything that's going on, we need to understand what's happened in the past and what's going on today, so we can kind of gather an idea, a horizon of what to look forward in the next few months. So we'll go from going back from October of last year. The market, this is New York Arabica coffee. We were breaking the dollar mark on New York Arabica. This is just the Arabica New York price, not including differentials. And we were breaking that dollar mark. And right around mid-October, we began a very substantial rally that we went all the way to $1.45. What was the cause of this rally? This rally came about because most traders out of Brazil were beginning to put out reports that the massive crop that we were expecting in 2020, the crop that we're picking right now in Brazil, was not going to be as high as everybody thought. 2019 was not a perfect year for weather in Brazil. We had problems in January and February of last year with the rains. We had problems with the rains during the harvest. We had a freeze in July of last year, and then the rains during the flowering season did not come perfect. So some of the traders initially had expected 70 to 75 million bags for Brazil for this crop that we're picking now. And they were saying that the crop was not going to be that large, possibly in the low 60s, maybe upper 50s. That expectation is what gave us this big rally into the market. Now, at that tip in December, the markets began to feel something was going on. And we began to see these problems in the financial markets. We began to see them in the energy markets, oil, gasoline, diesel. Those are very delicate and very susceptible markets to any changes going on in the economies. So we see that already mid-December, coffee began to hit its peak and began to pull back, as, if we can say that. Also, going into mid-December, towards the end of December, the reports out of Brazil and out of the trade houses began to show that the numbers were in fact coming in the upper 60s. And the reports, instead of saying that we were looking for not a perfect crop, we were looking for the 66, 67, 68 million bags, and people were talking the numbers back up again. And that's how you began to see the market starting to collapse. But right around January, we get hit with the coronavirus. Right around mid-January towards the end of the January, we did see that this coronavirus situation, this possible pandemic, was definitely going to have a toll in consumption, global consumption, not just consumption of coffee, but just about every product. And we publish every year, we publish the Brazil coffee estimate. We have a team of agronomers in Brazil. We publish our estimate. Our number is going to be 65.1 million bags for this crop that is being harvested right now. And the market, as with every single commodity market and financial market, really took a toll. The markets collapsed. We went from $1.45 down to $1 again. And as you can see by the last circle, the coffee market began a very volatile session between March all the way through May. And we're going to talk about this volatility and what is the cause behind this volatility that took us from $1 in February to $1.25 early March, then back down to $1 in March, and then back up to $1.30 in April, and then right back down. These are 20 to 30% moves in the prices, and we need to understand why that is. And this, the definition of this is all of the traders in the world of coffee and also trying to speculators what is going to happen with this pandemic. This is what's happened up until today. And we need to also remember that back in July of last year, Brazil had a freeze. Brazil had a freeze that in normal historical times, prices could have doubled. And we just didn't get that. And it was the reason that Brazil, the farmlands, you know, a lot of the topography, a lot of the planting, a lot of the distribution of the coffee fields have changed. So we've gone through a year of pretty difficult times in Arabica. And in Robusta, I know we have several friends in the Robusta. We did not see that big of a volatility, although we did have tremendous moves in Robusta from October to December, similar to New York. And then we went in a downward trending channel. And that's where we're sitting right now with Robusta. But let's talk a little bit about volatility, because sometimes we get the term confused. Volatility is the expectation of fluctuation in the markets over the next 12 months. Expected fluctuations. Volatility in the ag world, in the agricultural markets, are composed of 3 ingredients. And every move that we will see up or down on the prices of any agricultural product will be composed of one or a combination of these 3 ingredients. And that's weather, global macroeconomic conditions, and the big one, supply and demand. Weather, we all know. Everybody here is a farmer. Everybody here is involved in the agriculture. We know what weather happens. But now we're already entering another Brazilian winter. So over the next 2 months, every trader, every producer, every importer or roaster will be very, very mindful of what's going on with the weather in Brazil, particularly the cold fronts. And we will be monitoring how the cold fronts develop, what are the intensity of the cold front, how fast are they coming, because it will move the markets. The second is global economic conditions and supply and demand. But let's look at global macroeconomic factors. Today, we live in a global market. And this is pretty much a situation that if anything happens in one part of the world, it will affect the other part of the world. And in our case, in coffee, it doesn't matter if that particular action or event happens to deal with a country that consumes or produces coffee. What happens is all of these global macro events, the first thing that they start moving are the currencies. And usually what happens is in times of panic, in times of conflict, or in times of uncertainty, money moves to the safest place. And the safest place for many decades now has been the US dollar. So even if the US economy is in economical problems, it is a safety refuge. So any problems that have, money moves to the dollar goes up. And as the dollar goes up, commodities go down. It's an inverse relationship of the value of the dollar and the value of all commodities. And what happens if the dollar goes up, we have devaluation in producing countries, in coffee producing countries. And if that happens, coffee producing countries become more aggressive, selling coffee because now we are generating more local money for every dollar that we sell. So anything that happens in China, Europe, United States, any geopolitical conflicts and energy prices will move coffee prices. And now we have a new player. Now we have a new problem, never seen before in this level. The last time we had a pandemic was about 100 years ago. Definitely different times than we are today. And the problem is that down the global economies. Literally 190 countries have been affected. Never before have we had this. And The Economist, this is the major shock in generations. What we are going through right now, as the economist Mohamed El-Arian from the previous PIMCO funds calls it the greatest collapse of industrial production in history. This is what we're dealing with. And more importantly, for us professionals in the coffee world, has been the greatest collapse of retail sales in history. This is what we're dealing with. Not only because we are coffee producers or coffee exporters or importers or roasters, but anyone involved in apparel and clothing, food. We are having a problem in the United States that we have to kill livestock and pigs because we have no restaurants using the products. So this has shaken the entire fiber of an entire global economy. This is the general commodities index, the old CRB index, Commodities Research Bureau index. And this is the basket of 25 of the primary commodities in the world. And we can see what COVID has done to our general complex of commodities. It has collapsed almost by 50% of its value. This is what we need to recover. We need to get this line back up into the average between the gray and the white lines. And the third ingredient that all of us have to keep an eye on are the fundamentals. What are the supply and demands? We conduct our own fundamental research, primarily because we didn't trust the international ones. We do this through our network of agronomers in Brazil, primarily, and also through our coffeenetwork.com sister company. But basically, we're looking at supply and demand. And the prices that you see in New York, the prices that you see in the London terminal for Robusta, those are what we call the base. That is the international center of valuation for these two products. The same way that we evaluate or we price all other commodities, whether it's gasoline or diesel or cotton for clothing, or if it's cocoa for chocolate, or if it's palm oil for oil, edible oil complex. These are the centers of international valuation. And on the long run, what determines this is supply and demand. On the short run, we have climate that will move the markets. We will have global events that will move the markets. But in the long term, we look at supply and demand. And looking at here at the supply and demand of coffee, total coffee supply and demand, both Robusta and Arabica, we see the blue bars, which is production, yellow is consumption. This chart will show us that over the past 12 years, and then we can go more, we really never had a supply deficit, even though many of our international organizations tell us that there is supply deficit. And maybe that's a reason why coffee has a problem maintaining higher prices. This is just, we have to look at total coffee pricing, including where the international markets are, plus the differential for every country and quality of coffees within each country. That is the total price. But base, the international markets are showing, based on what we're looking at, supply and demand, production and consumption, we really haven't had a supply deficit. And you see 2018 with a red bar, that was the new record world crop production. Why does it behave like this? And we call it repetitive cycles. And that red line of massive production came about because of the consequences of 4 years of relatively high prices. And these relatively high prices can start 14, where we had a severe drought in the Brazilian coffee Arabica areas. That doubled prices from $1 to $2.20 in a matter of 4 months. Then we had another drought in 2015 in Brazil, but in the Robusta or Conilon areas. The next 2 years, we were trying to reel back from these natural disasters, but 4 years of very high prices. That led to more investments in the fields, investments of fertilizer, husbandry, maintenance, and that gave us the big, massive production, not only led by Brazil, but just about every country had an increase in their production. As you can see by the yellow lines, we do see that consumption goes up, but you can see the volatility of production really outstrips consumption. That came on the heels of 2012 and 2013, which we had 2 back-to-back years of very high production. Once again, led by 3-4 years of very high prices, due from the heavy amount of investment funds that came into all commodities during the commodities boom. 2008, we had a massive rally in coffee prices, even though we were looking at a new record crop. 2011 was the year where the market of coffee saw the biggest rally in history without a freeze or without a drought, mostly led by this commodity investment push. So we're seeing these repetitive cycles. And we've seen that for the 2018-2019, we had, of the producing countries, a total of about 170 million bags, and of the consumer countries, taking about 160. But this left us with tremendous amount of leftover stocks, hence the drop in prices. This is 2019, our numbers for 2019. Again, we had a big pullback in production in Brazil, but we did not go into deficit. And the biggest problem is this one, 2020. 2020, where everybody was already talking about the massive potential of the Brazilian harvest, also other countries involved. And we were looking, going into the December month of last year, this potential. That's why prices came down. But now, and this particular chart that I'm showing, this particular shot here in the blue lines, this is our estimate as of January, February. All of this we have to put in question now because of COVID-19. We have to question production, and we definitely have to question consumption. So these two bars, this last picture, we will be changing. And we will be changing over the course of the next 2 or 3 months once we get a better view of what is going on in the harvest, what is going on with the opening of the economies, what are the problems going on with consumption. So the last 2020 chart, it's good until January or February. And what we need to understand is what can be expected over the course of the next several weeks on the price behavior. And out of the entire presentation, I think this is the most important screen for all of us to understand and to try to decipher the next move, because this is exactly what the traders, what the market is thinking. And the the next wave of buying or selling will be based on one of these two schools of thoughts. The first one, what is the production going to do, and are there any harvest concerns? And these are in the minds of all the traders and all the investment fund managers. And they call us and these are the questions. What is going on with production? And just as a side note, we hear all the involvement of the speculators and the funds into all the commodities. The first question that most of these fund managers will production is how is consumption. They are very much interested in the supply and demand situation. It's not just, oh, let's bet prices are going down or let's bet they're going up. So what's going on in the mindset of every trader is what's going on in production. Are the countries going to have any difficulties, or are we going to have losses of the harvest, or are we going to have a massive delay in the harvest, and because of that are we going to have production losses? And specifically, we need to keep an eye on right now in Brazil, in Colombia, in Peru, Indonesia, a couple of the countries in Africa going in, but these are the four that may be most affected by this COVID-19, and particularly is Brazil, because it's the biggest and we just started the harvest. And unfortunately, Brazil is getting hit with tremendous amount of new cases. Colombia's got a pretty strong lockdown. Their cases are down. Peru, they've got pretty high cases, but controlled the amount of people that have died. Indonesia is also going in through harvest. So this is one of the thoughts of what's going on. We need to keep an eye on how aggressive these countries will react if the cases go up. And the second thought that everybody is thinking is what is going on with the drop in consumption, because shutting down the world economies and nobody can go out hurts tremendously our out of the home consumption. Now in early March we had a massive increase in home consumption through the sales of supermarket and retail food outlets, but out of the home consumption collapsed. And we are talking hotel, the HoReCa, which is hotel, restaurants, cafeterias, but also most important, for example, in the United States, office consumption. We consume a tremendous amount of coffee in office buildings in this country. This is normally out of the house consumption 30 to 40%, depending on the country. So that is a huge hit for consumption that obviously some of it was taken up by home consumption, and a big rally that we saw in prices was this home consumption at the beginning of March. And there was a massive amount, but a lot of that had to do with everybody going to the supermarkets, knowing that we were going into quarantines, knowing that we didn't know how long we would be in quarantine or what type of quarantines we're going to have. So everybody went to the supermarkets and basically we bought everything. And the supermarket shelves basically became empty. Everybody loaded in rice and spaghetti, in coffee, in sugar, in dried foods, in case this would go on for weeks. So that was the big push that we saw initially in March, but hence it has settled down a bit. But we need to see how we reopen the markets, what's going on in these countries. I'm showing you a picture now of the checking of the cases worldwide. This is the COVID-19 tracker. And we see that cases in Brazil have gone up to almost 272,000. This was yesterday. May 14, we had 174,000 cases. Yesterday, we had 272,000 cases. So we went almost 100,000 cases in 5 days. And Brazil has now overtaken the United Kingdom as the third most affected country after the United States, where we're over 1.5 million cases, and Russia, which is almost, I believe it's 390,000 cases. So we need to watch how this progresses in all these countries and what are the measures that each country takes. Because if we lock down, we're going to see Arabica prices go up because we're not going to have that harvest. And the most important thing is getting the economies opened up again. We need to safely, first of all, we need to safely reopen these economies and get the public back into spending money. And we are seeing already Germany, Denmark, Austria, China were the first ones to start opening in phases their economy. Spain and Italy, which were hit extremely hard, already opening. Coming China with more activity into the markets. We are seeing China already beginning to buy more actively palm oil for their cooking. USA, we're the largest economy in the world and the largest single country consumer. We need to get the US consumer out into the street. And luckily, all of the 50 states in the United States are in some type of format or phase reopening. So that's a good news. Most of Latin America, unfortunately, are still in some type of mandatory confinement. Colombia extended again a very strict confinement up until, I believe it's 6th or 7th of June now. What does it mean for the United States, and why do we need to, as coffee producers, get this economy rolling again? This is what happens 5 weeks into the shutdown of the economy. In 5 weeks to April 18th, we went to 26.5 million unemployment claims. In other words, 26.5 million people claim a loss of their jobs. This is nothing compared to 3 weeks later that we jumped another 10 million people claiming unemployment. We went from 26 to 36 million in 3 weeks. The problem with this is that unemployment claims at 36 million people is equal to 22% unemployment, because our labor park is 165 million people. Out of the 327 population, 165 is our active job-seeking population. So that is 22%. Tomorrow we'll have another number, and we could, in theory, get very close to 40 million unemployment claims. And that will push us very close to 25%. In other words, a quarter of the population unemployed. These are very high income per capita, and we need to get them back employed for them to continue to spend money. Prior to the COVID situation, the unemployment rate in the United States was 3.5%. This gives you the magnitude of the problem. And one of the topics that in all my presentations, in all my speeches, I constantly attack is consumption. We as a global coffee community, we need to be actively involved in this. We need to demand our coffee leaders to get involved in this. We need to bring the whole world together to figure out a way, how do we promote consumption in coffee? And we need to ask ourselves, who in the coffee world actively promotes consumption? As in Coca-Cola, or as in beers, or as in other soft drinks or sports drinks, or even in the way that we promote the energy drinks. Incredibly, the energy drinks are promoted much heavier than coffee. And what's the main ingredient of energy drinks? Caffeine. So this is where we have to, once we get out of this, once we get out of the situation of the controls, we need to, as a world, aggressively promote consumption, not only at destination, but most importantly at the producing nations. Because we do have a pent-up demand waiting for these economies to reopen. You know, my wife wants to get out there and go back to her favorite coffee shop so she can order her latte macchiato. All of that is waiting. And we will see, once we get the economies back on, we will see that demand come in because we are seeing a lot of final buyers asking for cancellation of contracts, delay of contract. Obviously, they can't use the coffee right now. We need to urgently reopen these economies because, as the International Monetary Fund estimates, global GDP for this year, the gross domestic product is expected to drop 3%. International organizations have said that every percentage drop in is only percentage drop in coffee consumption. Well, if we have 1% drop, that will be 1.6 million bags. 3%, it's almost 5 million. And if we have 6% drop, we could be talking 10 million bags. So we do see a drop. A lot of the people don't have jobs. Obviously, the stores were closed. So this is where we have to aim our efforts, more now than ever before. And one of the primary places that we can get to, the easiest, closest to us, is producing country consumptions, which are pretty bad. This is a chart that I did, I believe it was last year. We see Mexico. Mexico produces 3.5 million bags, but they have a population of 130 million. And their consumption is about 2 million. This is quite low. Just to give you an idea, the United States has a population of 327 million. We consume approximately 25 million bags. Look at Peru, 5.2 million bags, population of 32, minimal consumption. Guatemala, 4.2, population 17, consumption minimal. Honduras, the same thing. And then big ones such as Vietnam, 32 million bags production, 100 million, consumption is about 1.5 to 2 million bags. Or worse is Indonesia, with 12.5 million bags of production, 265 million population, and they consume about 4, maybe 5 million bags. This is where we need to attack. If, for example, Indonesia, which has a very minimal per capita consumption, if we get Indonesia to go from 4 to 8 million bags, Indonesia disappears as a supplier of coffee to the world. They will consume their production. And if we can, we are very close of having that break even. In the chart you saw the production and consumption were very close. We are very close of always generating a deficit instead of always generating an excess, which is why coffee prices are always seem to be drawn to $1 or drawn to $1,100 a ton in Robusta. This is the trick. A little picture of what's going on in the commodities since the beginning of the year, and especially since the beginning of the crisis of COVID. These are all the commodities. This is a picture of April 14, and we see that every single commodity lost ground, except coffee. We went up 4%. This was a result of that initial supermarket push buying around the world, and around the beginning of March, middle of March. The next slide, we'll see the same in a different view. April 21st, coffee prices, and we see coffee that went from plus 4% to down 4%. And we see other commodities such as crude oil lost 76% of its value. We saw palm oil losing a third, over a third. Sugar lost 31%, cotton 21%. But coffee was still doing better than everybody else. And here's April 27. Already we're beginning to see that fight between, okay, what's worse, the production problems or the consumption problems? And we're beginning to see that showing its effect, down 8%. And since then, we're down a little bit more. And not just the commodity prices, but products such as fertilizers, urea, nitrogen. We saw big dips into the forward pricing, and some of the big farms, some of the big co-ops took advantage by doing fertilizer futures and being able to secure July, August, September, taking advantage of these low prices. Now, what is the composition of coffee price? What is all of the components? First and foremost, and this is true in all commodities, not just coffee, and it's true in Arabica and Robusta as well. The first is the central exchanges. It's the exchange of New York, which is called the Intercontinental Exchange, where we trade Arabica, and the London terminal, where we trade Robusta. That's one piece of the equation. The second one is local currency rates. Ethiopia rate of the exchange rate of Uganda or Colombia or Brazil or Vietnam. And the third part is differentials. The combination of these three variables give us the internal coffee prices for each one of us. Over the past couple of months, we didn't see the exchanges go up. As a matter of fact, over the past several months, they've been going down. But we do see most of the currencies, not all of them, most of the currencies taking a big devaluation. And as well, we've seen differentials go up. And we do have an inverse correlation. If the New York or London prices go down, differentials tend to go up. New York, especially if it's below $1.20, and Robusta if it's below $1,300. So we've had differentials and currency rates favor the producers, but the New York Central and London, they've gone opposites. Now, of all these, the one that has given the biggest income shift for producer is the currency rates. And like I said, not all of the countries, most of the countries. So for example, we had Ethiopia devaluate, we've had Colombia devaluate to its lowest level in history, Brazil devaluated to its lowest level in history, Mexico as well, but other countries such as for example, Guatemala, they have not devaluated, or other countries that are dollar-based such as Ecuador and El Salvador, they did not get this benefit. Here we have some differentials, and you will see that somewhere around the February and March, you see a spike. In all of the differential, you see that March throws a spike. And this is due to that big supermarket push, and the push also of many trade houses sending letters to many of their buyers and suppliers, suggesting them and advising them to stock up because of the quarantines that were coming on. So that was also in relation to the big push in the prices in the exchanges because of this initial demand. Once that demand abated, then you see differentials either leveling off or in some cases coming down. Now, big move of the exchange rates. We have seen in the past 3 years the highest volatility of the past 30 years. And this is important to understand our coffee pricing and the behavior in the exchanges. Here we see the Colombian peso taking a devaluation because of COVID of almost 30%. What does this do to a producer? It provides a lot more local income, so Colombia becomes active in selling futures. Here we see the Mexican peso, almost 40% because of COVID, massive move. Here we see the Brazilian reais, the biggest producer in the world, all of a sudden devaluates 40% in 2 months. This is a massive move that obviously affects international coffee prices, because for a coffee producer in Brazil, all of a sudden their income, even if New York goes down, their income went up. Here we see devaluations of other countries in the coffee world. We see Indonesia, they had a big devaluation and a correction. We see the Indian rupee, another big producer, 5 million bags. 5.5 was announced yesterday, 5.5 million bags. Ethiopia, we see the Vietnamese. What causes all of this? The collapse, not only of the economies, but oil. Petroleum is a big part of a lot of the emerging market currencies. And here we see that oil from the beginning of January trading at around $62 collapsed into April to $12. In other words, it lost 78% of its value. But that's nothing. Petroleum did something that nobody in the financial markets thought could be done. Petroleum did something never done before, and most of the people could not believe that it was possible. Petroleum went negative, and the exchange announced that day that they will allow petroleum. It went $3.32 negative. In other words, if you were selling petroleum, you would not only have to give that barrel of oil, but you also have to pay the taker $40 to take it away from you. Simply what happened was that the collapse of the economies, the collapse of consumption, industry, remember, all economies were shut down, nobody could go out. There was a massive backlog of oil deliveries. There was no place to store it. People were paying others to take it away because they had no place to receive it. And this is one of the big results of this COVID-19. But that devaluation that we spoke about in Brazil, what happened? It took us to almost record high prices in the internal market. This picture shows just shy of 600 reais per bag. We went well over 600 already. So what does this do to the investment community, to the international pricing? Well, we see that major coffee economies are getting, because of this devaluation, almost record prices. And obviously, if you're a Brazilian producer and you see close to 600 reais and your cost of production is 350, you have to say, I need to lock on to these prices, and I need to lock not only the harvest that I'm going to put out this year, but I want to hedge next year's, and I want to hedge in 3 years as well, because at these levels I need to secure not only my budget for my husbandry and my taking care of the farm, my labor, my fertilizer inputs, but I also need to do a budget for something called future pricing. So the producer can lock in prices and guarantee this income. And that's coming into the market generates pressure into the prices. And that's the relationship of currencies, other commodities, and anything that's going on with COVID-19. So one of the things that we can do is look to figure out how we can protect these prices. In other words, how do we hedge our risk? And there are two basic parts that we need to do in that triangle that we saw, where we have the international market prices, where we have differentials, and where we have currencies. Two of those can be hedged. Differentials cannot. But the other two, we can hedge. We can hedge the exchange rate and try to guarantee that we get these favorable exchange rates as a coffee producer that we sell in dollars and we spend in local currency, and then protect the New York and London coffee prices. And there's several ways of doing it. Let's take an example of the Colombian peso. So this is the exchange rate of the Colombian peso. I'm sorry I didn't translate it from Spanish to English yet. But basically, this is the devaluation of the Colombian peso, and a producer can come in and buy an insurance to protect the collapse of the Colombian peso. If the Colombian peso collapses, that producer can be guaranteed that her dollars will be exchanged at a much favorable rate. Now, not all of the coffee producing currencies have the ability to do FX or foreign exchange hedging. Most of the African countries do have some limitations. For those that are joining us from Africa, the suggestion would be to reach out to your local banking institutions to see what type of hedgings they can provide in the currency, especially if your currency has devaluated. You want to protect that, because once we get out of the COVID-19, once we get out of the situation and we start opening the economies, the first thing that you will see is the dollar will start going down. And if the dollar starts going down, the local currencies in the coffee producing countries will start getting stronger. And as a coffee producer, I want a weak currency so I can get more local currencies. And the other idea that we use for coffee producers does work very well are called variable sales. Variable sales are different to the sales that we do nowadays. See, we'll go up to our local buyer or our co-op or our exporter, and we will say, I want to fix coffee prices. To them for a fixed price, and we walk away. I, as a producer, what I want to have is the ability to say, I'll sell you my crop, whether it's today because I just harvested, or I want to pre-sale my harvest at the end of the year, but I want to do it in a way that I get a minimum price, but if the market goes up, I also want to get paid more. In other words, a minimum with a participation to the upside. So how do we do that? What we do is, if we look at the markets, we look at the, we're in a bearish market situation due to supply and demand and all other factors. Maybe we're holding back in the hopes of getting higher prices for our product. And the market conditions during this time of holding back continues to worsen. So I need to somehow protect, but at the same time, if prices improve, get paid more. And this is the basis for variable sales. We developed variable sales many years ago when a couple of the roasters were asking us help with producers in South America that they needed a way to exit this problem of volatility. We need a strategy that can provide us a minimum price, but with the capacity to participate in case the market rallies. So 2 steps. Number 1 is we sell or we fix a coffee as normal, but we buy a price insurance in case the market rallies. And that way we convert our sales into variables. So mechanics here, and this can be done in London, or we can do this in New York. We see here New York trading at $1.07, very low prices. Let's say I am from a coffee producing country that has not been benefited from devaluation. Maybe I do have good differentials, but the market is low. Let's take an example of Guatemala, where their currency did not devaluate. They have a strong currency, low prices international, but decent differentials. So a coffee producer that may have production in October will come in and fix the coffee. So we lock the prices. We set a minimum price. And we buy an insurance. And this insurance, combined with our coffee sales, whether it's physical or futures or on our accounts, will increase the price that we fix the coffee. So that if the market goes up, we raise that 107 with the insurance. How does it look in an account? If we take it to our books, we sold coffee at $1.07. Maybe we spent 5 cents a pound to buy the insurance for almost 4 months, and that insurance starts at $1.15. So basically, I'm looking at the situation that I sold at $1.07. I spent 5 cents in this insurance because we have a lot of uncertainty of the next 2-3 months. We don't know what's going to happen. We may reopen real fast, and all of a sudden I sold coffee too early, and this market explodes. And that's one of the reasons we hold back on doing our price protection. Or by holding back, we don't see the market go up and all of a sudden the market collapses. This gives us a minimum price of 102, guaranteed, but variable. So that in case the market has a big move to $1.80, that insurance that we purchase will pay us 65 cents, which is exactly the difference where we bought the insurance at $1.15 and then moved to $1.80. So we take what the insurance pays us, 65 cents, we add it to our original price of 102 variable, and that becomes $1.67. These are some of the things that can be done, especially in these times that we have a massive amount of uncertainty. We don't know what's going to happen. We are optimistic. We believe that as soon as we can get everybody out on the streets, as soon as we can get all the coffee shops going, as soon as we can get people back into the offices and drinking 3, 4, 5, 6 cups of coffee a day, we're going to have better situation outlook on prices. The last slide is a slide. What I just said is my optimism, is what we're looking forward, and it's back to the future. This is where we're going. We already gone through the worst of the times. Now we have to get back into the streets. And this is a picture that I want to share with you because I want to let you know that as soon as this is over, I'm going back into the coffee shops and I want to make a line. I want to look for the busiest coffee shop and I want to get into lines. And this, we're going to be extremely thankful that we can make a line to purchase coffee again. Once again, I'd like to thank the Alliance of Women in Coffee. I want to thank everybody who gave some of their time to participate, and my special thanks to Callum and Blanca for giving me the chance to speak to you. Thank you.
Thank you, Albert. This is again, this is amazing how although this subject is very complex for many of us, I'm the first one to raise my hand saying I'm learning here the best I can, but every time I hear you, I understand a little bit more, and especially during these times of uncertainty and what is going on, we need to be very alert, communicated on between each other so we know what's going on. And we do appreciate you presenting on this particular subject. I love your last picture because it's Back to the Future is like the optimum that we all will want. I know there is our wishful thinking right now. Everybody would like to go back again to that stage. So thank you so much. I have some questions.
This is where we're going. This is where we're gonna be.
Okay, I'm praying and crossing fingers and doing everything we can to do that. I have a couple of questions and comments to you that I would like to share and open up for a discussion, if that is possible. There are two that are related. It is about the specialty coffee market and the effect on the loss of jobs, and about how this will have an influence about with the at the farm level. What about the specialty coffee market?
All right, so that's a good question, and this is something that we can look back in history and see what has happened in the higher end priced coffees during these dark times. And we can go back to September 11th of 2001. We can go back to the financial crisis of 2008. This particular event is nothing compared to those two. We thought the financial crisis was a disaster. We thought September 11th was a bad time. Those, in reality, was a short walk in the park compared to what we're going through today. Oh. The situation, what happens when we have almost 40 million people out of work in just one country. In China, the numbers are running upwards of 100 million people unemployed. Europe will have to see Europe has different employment laws. Many people have short-term contracts, so they're not effective immediately. Maybe when the contract is due, then you will see the unemployment. Latin America, we have a similar situation. So, like I said, this is the first time we've gone through this. We still don't know when the dust settles what happens, but definitely we have a massive situation of job unemployment. People in job unemployment, they need to watch every penny. They need to watch every part of their income and expenses. And unfortunately, I will not drop my coffee consumption, but maybe instead of buying a high-end coffee, I will have to save some money. So if we go back to 2001, 2008, that was the result. Now, the positive part about that, yeah, you see that dip, but once we get, and this is going to happen in the US, what's going to happen now that we start reopening, people are going to start hiring the people back up. So we see this big curve going up in unemployment, and then we're going to start seeing the curve going down. We do see pent-up demand waiting for the economies to open up. But in the short term, to your question on the specialty coffee market, the higher end coffee historically and in bad times tend to hurt in the short term because people are just looking for something. But we second part, though, back in 2008, 2009, we saw roasters shifting more to lower grade coffees because they need to put something more affordable on the shelves of the supermarket. But again, we saw that the dip, and then we see right back recovery.
Okay, thank you. Well, we really hope for that. There is another question. There will be Monica Aguilar. She's asking, there will be a special fusion of technology and coffee consumption and sell. What I mean is that coffee shops will have to be more aggressive on the use of technology to sell using social media and to take orders. Can you comment on this, please? Thank you.
Thank you, Monica. Great question. Yes, definitely. And we're already seeing that technology fusion that you're mentioning. It's incredible. To me, it was very incredible how, and I guess it's part of the technology that we live on today. I never thought I was going to do webinars. I never thought I was going to teach classes through the internet. And all of a sudden, you know, we've had to learn this. And it's incredible to me how many of these restaurants, many of the coffee shops, all of a sudden immediately re-engineer themselves to go exactly to what you just said, the technology of coffee consumption. You order your latte, you go quickly pick it up. You don't even go into the coffee shop, just take it out. It's like a combination between a drive-through and an order take out through the door. It's incredible how we are behaving, and I think this is going to be also a game changer.
Absolutely, and at all levels. I have a comment here from Patricia Tomaino from Cameroon. She says that in French, she says that they just started to work with online orders just to encourage the demand and sell. But it's very hard in the culture there in Cameroon, but nevertheless that they will keep on trying doing that. So that goes along with the comment that you just sent. I have another question here from Janine. She is from Burundi. She says, great presentation. Could you please provide the scenario if there is no back to the future in the normal ways we are used to? Best hedging strategies for producers in that scenario?
Great question, Janine. I was thinking about this exact question yesterday after we finished the Spanish presentation, and we were having another discussion with a group because, you know, what if we don't go back to normality? And, you know, I kept going back to what happened in September 2001, September 11th. When September 11th happened in this country, and I'm going to put a little bit of context, I was stuck in another country. I couldn't get back. They said, we don't know when you're going to be back. We don't know if there's going to be any more airfare. We didn't know if there, you know, everything had changed, and that was, okay, what's going to be the new normal? And one of the things that I kept going back and remembering was how time is the best healer of everything. And yeah, we went through a big shock in this country, the whole thing. And then all of a sudden there was all these restrictions, you know, normal was not normal anymore. And as time went by, things started to relax. Things, okay, you could do this, you could do that. And I think something, and this is my personal opinion, I think that's good. We're going to see that in coffee and the general economy. Okay, we went through this virus, but then we have to think that back in 1920, we also had a massive virus, a pandemic, and all of a sudden we developed a vaccine and we started going back. So time is the best healer. And I think what we're going to see is that over the next several months, we're going to start seeing people, not wearing masks anymore. Yeah, taking social isolation, social distancing more in the mindset of everybody. But I'm a firm believer of going back to normality. How and how long it takes is another question. On the hedging question that you just asked, the best hedging strategies for a producer, in my opinion, working with so many producers throughout the year, to me, I want to give the producer the capacity to be able to have a minimum price, but participate if after you sell it, the market goes up. I want to have a minimum, but in case it goes up, I want to get paid more, even if I already sold it. And the best strategy to do that is that example that I put there, which is called the variable sale. The second part for the currencies, and I'm not sure which country you're from.
She's from Burundi.
I will look into doing some type.
Burundi.
Burundi. So reach out to your local banking institution. I'm not. I would have to check the currency to protect the currency if there was any devaluation. Because if we go back to normal, and as soon as the economy start opening up, things quiet down, the US dollar will be going down. But for a coffee producer, just coffee prices, the best solution is that variable sale. To me, personally, working with producers, because as a producer, I want to guarantee that it doesn't go any lower, but I want to participate if it goes higher, even if I already sold it.
Okay, thank you. Rosario from Philippines, she's asking if you have any comment or advice for the Asian coffee producers.
Pretty much similar to everybody else. We're 80 countries in this world that we produce coffee. Asia, the Americas, Africa. I guess on the Asian, we need to promote consumption just like everybody else. We need to really push this consumption situation, especially before, because we were lethargic in our consumption. Even though it was growing, it was slow. We were growing about maybe 1%, 1.5%, maybe less than 1%. We need to get that up to at least 3%, real 3%. And also through the Asian countries, we need to get the consumption per capita going as well.
Interesting. Yeah, there is much to do there. I have another question. I have more questions here. I hope you don't mind.
No, go ahead anytime. We got time.
Thank you.
Let's answer all the questions.
Julie Kavira Kamungele from DR Congo. She's asking, how do you see post-COVID-19 green coffee demand in terms of conventional versus specialty, or Robusta versus Arabica?
All right, so on the consumption side, COVID has hit us really hard on the consumption. You may have seen other news saying that consumption in the home went up 30%, but consumption in the street is 30 to 40% of consumption. So if we take 30-40% out and our in-home goes up 30%, we're still negative. Usually in these crises, the people tend to save money. We need to save money because maybe I lost my job. Maybe I'm only living on savings, or maybe I'm living on a very limited government handout. So I need to make my money stretch out as much as possible. So typically, obviously, consumption is down, but inequalities tend to move a little bit from higher end pricing coffees to more conventional. And on the Robusta Arabica, let's see what happens. Too early to tell, but usually going back to 2008, 2009 of the crisis, supermarkets roasters tend to put a little bit more Robusta in order to put a lower price coffee. So we will see that. But the good thing on the overall economy is that there's quite a bit of money out there. We as a global economy tend to are a bit richer than other decades. So even though those are what's happened and what we can see, you know, we're probably going to get surprises. I do see that once we get back on, 2 days ago, there was a big report that there was a very positive result by the pharmaceutical company Moderna, which had some very positive results with one of their vaccines. So, you know, usually a vaccine takes 12 months to 24 months to develop. They're trying to push this as fast as possible. So a lot of variables to look, but that's basically what we're looking in the consumption side. Conventional specialty and Robusta Arabica.
Okay. Okay. And then Sara Jirka from Ethiopia and Primus Kimario from Tanzania, both questions are related to roasted coffee. And it says, if you think that coffee export trends from producing countries will increase, and if there will be a shift in coffee supply from roasters driven market to producer driven market.
I'm sorry, I lost you the last sentence. You broke out.
If do you think after the pandemic there will be a shift in coffee supply from roasters driven market to producer driven market?
From a roaster driven markets to producer driven markets. I'm sorry, I'm not understanding the question.
Maybe he would like to know if the roasted coffee will be more in the market than the conventional green market.
Well, what we're seeing from our customers as well, right now there's a backlog of green coffee. In other words, all of these roasters that all of a sudden shut down, that maybe their specialty was delivering coffee to retail outlets or maybe to coffee shops or to street consumption. A lot of those roasters have loaded up in inventories. Some of them are asking their suppliers to hold back a bit. So what I think is going to happen is once we reopen, we're going to draw down those stocks and we're going to have a lot more activity going into the retail shops. And I think that's where you're going to see them move, but it's too early to tell. But you can have my WhatsApp. I don't remember who was the person that asked the question. If you want to call me and we can discuss a little bit more so I can better understand the question.
Yeah, that's Primus Kimario from Tanzania. I will share your contact to him. And
yeah, I have it on the screen. I have it there. Please feel free to reach out to me on the WhatsApp number.
Okay, and we have a last question from Anne from Vietnam. She says, Albert, please clarify, buying insurance is done through hedging, or how can I purchase the insurance?
Okay, so anybody that wants to, have hedging directly, the first thing they have to do is open an account. If we want to send a wire transfer, if we want to write a check or deposit some of our cash, we open a bank account. If we want to do these instruments, we have to have a hedging account through one of the financial companies. That's what our main business is. So the process is to open one of these accounts. Let's say that particular company or producer or farm or cooperative, if they can't open the account, well, they would have to go through somebody else. A producer will most likely sell their coffee through a co-op or through an exporter. That exporter or that co-op will probably have an account or will need to open an account. If I'm a producer in any part of the world, I can go to my co-op. That co-op should be able to offer hedging services, whether it's doing, pre-selling my coffee for December of this year or March of next year, or maybe December of next year. And at the same time, they should be able to offer you the ability that if, okay, you know, I don't want to sell the coffee, but I want to buy a price insurance in cases the prices collapse. Just like I go and I buy a car, the first thing I do is buy insurance in case of an accident. I can do the same thing for my coffee prices. So it's either directly through one of your own accounts that you open with one of the commission houses, or through your commercial relationship of where you sell your coffee, whether it's an exporter or a cooperative.
Okay. Okay, if anyone has any other particular comment or question, you can always write us. We will connect with Albert. Albert has been so kind and open to be there for us, and we really appreciate the time he has for us today. Albert, I think that the request for having a presentation in Portuguese is up there. We might bother you with that,
All
and
right,
which will be great, I think.
perfect. Well, thank you very
Okay.
much.
So I will end up our session today by thanking our sustaining partners. I have here my slide with all of these companies that have been supporting IWCA for the last 2 years, and we are very grateful for their support, because otherwise we shouldn't be here, and there is much more to be done. There's a lot of work to be done, and we ask you kindly to get connected and be there for us. I've been receiving a lot of comments, Albert. Thank you, wonderful job, and thank you. This is amazing. This is really encouraging. My last slide is a little announcement. We already have opened and published the coffee availability lists for those who have green coffee to offer. Please contact us, and we will update this list as soon as you come up with their new crop. We will be ready to publish in there too, and we are preparing a new list with roast coffee list. This is a list with those roasters around the world who are getting coffee from chapter members, so that they can be also part of the family, supporting all the chapter members who are selling their coffee to these roasters. So thank you so much again, and let's keep in touch. Have a wonderful day to all of you, and thank you again. Thank you, Albert.
Thank you, everybody. Good luck.
Okay, bye-bye. Thank you, everyone.